This month marks 250 years since Barings Bank, one of the first significant international investment banks, opened its doors. Nick Leeson, author of Rogue Trader, and of course infamous derivatives trader, joining me in the studio. Reuben Beelders, portfolio manager at Griffin Asset Management, joining us from Cape Town for the conversation. So thanks for joining us, Nick. It's great to have you in South Africa. Of course, 250 years old Barings Bank would have been if it were not for you, I suppose. Just remind us, for those of us who don't know and didn't live through that period, how you brought down the oldest UK investment bank.
Well, the year was 1995, and it was through illegal trading, hiding unauthorised trades in an account that became infamous, the 5/8 account. Ultimately, I lost £862 million, and that brought around the collapse of the bank.
Mm-hmm. So, of course, a few years on now, and we're here to talk to you about regulation right now in the banking sector. Sure. We're here to talk to you about risk management. But just give us an idea of what goes through the mind of a trader when you can see this large position going horribly wrong.
Well, I mean, a lot of panic. I mean, you don't know how to deal with it. You know, I was 25 years old when I worked in Singapore at the time, so I'd be the first to admit that I didn't have the necessary skill set to deal with the situation that I was confronted with. I certainly didn't have the systems available to me to look at the risk that was there. But you know, there were some very simple things that I should have done. I mean, I was surrounded by people that had experienced similar things in the past and obviously chosen a different path. So the most simple thing that I should have done was ask them for help and advice. But you know, I was somebody who wanted success, had a huge fear of failure, was very driven. But when I started to encounter things that I couldn't cope with and the position started to get bigger and bigger, you know, you become very blinkered to what's going on, and you focus just on trying to correct the situation.
What should you have done?
Well,
I'm sure you've had many years to think about this.
The first thing that you should do when you have an error is you should cut it straight away. I mean, and you know, that's inbred in you throughout when you're working in a financial in a financial firm. But you've seen, you know, the culture is something that starts to build around you, and I certainly wasn't the first person to put a trade into an error account. Neither will I be the last. You know, there's been a number of people who've followed me since, and so, you know, sometimes stepping over that mark isn't such a big step as it should have been, and that's a problem of the culture within an organisation, and something that needs to be looked at. And obviously, we've seen, you know, far more dramatic things since that time. Mm-hmm. You know, bigger sums of money, rate fixing scandals in the UK as well, which are similar sort of things where people step over that mark, they transgress, and then once you're in the situation that you've done it once, you know, you kind of become more comfortable with it, which is wrong. Mm-hmm. You know, it should be punished accordingly the first time, action taken, and hopefully that sends a message to people that you don't do it in the future.
Before I get your view on this, I'd just like to bring Reuben into the conversation. Reuben, what's your view right now around whose fault it is when trades go wrong? Who should take the blame? Because obviously, often, you know, in the case of Nick, time spent in jail. In the case of Kweku Adeboli, also time spent in jail. But should companies also take the blame when it comes to this in terms of their risk management systems going wrong?
No, look, I think it's quite a difficult question to answer. Obviously, I think from the perspective of any operating company, any organisation should have risk controls in place. They should have preventative and detective controls. I think those are things that chartered accountants are taught early in their training. I think what does complicate it is in the financial services industry, it can be very difficult to implement those controls and to implement them effectively. But yeah, I think with all due respect, in the past there's been a level of laxity in that regard. I'm not 100% sure whether all the added regulations that have been implemented since the financial crisis in 2008 are actually going to address the issues. There's a huge debate about your sort of heavy regulation or light regulation and what actually works most effectively. My personal opinion is we've probably gone a little bit overboard on the heavy regulation side, and we probably have more regulators per person in the financial services industry than at any point in history, and I'm not sure we're actually going to achieve our objectives. Mm-hmm. So yeah, I think it's a combination of trading people. You know, Nick refers to the fact that he was 25 years old. I'm not 100% sure that the level of authority and ability that we give to people at that age is a wise thing to do. But yeah, in my opinion, that is the responsibility of employers and not employees at the end of the day.
In the case of, Kweku Adeboli, sure, that loss, $2.3 billion for UBS, also a young man. Is this also a problem? You need to, kind of give responsibility to those who've had years of experience, not 25 years of experience.
Well, I think if you're going to give people responsibility, you have to support them as well. I mean, there was no support at Barings. Communication is another key thing. For an industry that is so based on being successful and is so against failing, it's just endemic within it that that's what the business is about. It's being successful, making money. That doesn't breed an environment where you can communicate your problems that readily. And that's part of the problem. There's no silver bullet to solve episodes like mine in the future, but there are ways that you can make sure that the business is safer and your own business is much safer as well.
Let's go through some of those ways. What about risk management right now? Because it seems that a lot of banks are moving away from riskier parts of their business, and
Sure,
certainly there is pressure on them to do that. But what can you do to ensure that banks don't take on too much risk?
Well, I think a lot of the regulation that's come through from Basel and the cases that have come forward from that have seen that happen, because capital adequacy has meant that a lot of the heavy risk trading has had to be pulled back on.
Mm-hmm.
But just from a risk management profile, there was a rogue trading scandal most recently in Austria, which involved the Salzburg municipality, and there's still very, very strange things going on. Obviously, I was very protective of my positions in Singapore. I didn't want anybody looking at anything that was going on. But in this Austrian case that's come to light just recently, the person involved in the illegal trading didn't have a holiday for 7 years. That's a basic thing that should be going on within any organisation.
Yeah, and certainly in financial institutions,
absolutely,
it's mandatory to take a holiday for a set period of time.
Absolutely. It wasn't at the time when I was at Barings, and I was very protective and wanted to make sure that I was always in control of what was going on. But that's a case that's happened in the last month. So whilst it's a finance-related industry, this person was invested in financial products, and yet she was there day in, day out for a 7-year period, hiding the illegal trading that she was doing.
Reuben, when it comes to the banking sector, of course, we know that it has to continually innovate, has to continue find new ways to make money, and that, of course, brings along with it a lot of risk. So almost inherent in financial institutions and in the model is risk. So what are your views on the appropriate level of risk, how to manage risk responsibly, and how do we do this if you say that we're moving to an era of overregulation?
No, look, I don't think the financial services industry is unique in taking risk. When people go down a mine, they've also got to make decisions about which ore body they've got to tap into, et cetera, et cetera. So I think every business has risk, and every successful business learns to manage risk well. The businesses that don't succeed don't manage risk well. So I don't think there's anything germane to the financial services industry. I do think that we have certain investments and certain products in the financial services industry which could perhaps more easily be abused. But then, with all due respect, I think the level of control over those particular investments need to be monitored more closely. The example referred to earlier about someone not going on leave for 7 years, with all due respect, that's been something that auditors have been told to watch for 50 years ago. So
do the auditors they take the blame?
No, I wouldn't say the auditors take the blame. I'm just saying that's not something new. That's not something that's kind of earth-shattering. That's the kind of control that people should have implemented ages ago. I think even when Parmalat went down 5 years ago, it was a simple bank certificate that hadn't been properly checked. And it's just amusing to me that so many of these frauds, in retrospect, could have been done if the basics had in fact been enforced properly.